Market to Market is everywhere you are. Subscribe to Market on YouTube, find us on the PBS video app to stream on demand, and add our 3 podcasts on your favorite podcasting app.
Welcome into the Friday, July 15, 2022 Market Plus. Joining us again, Chris Robinson. Chris, I made you stop a couple of things. Sorry.
It's okay.
Had to move through. Hogs is the first one. You were starting to say, they were yelling in my ear. I didn't hear what you said. What'd you say about hogs?
The demand has been good. You also are going to see, I think, more money coming on the speculative side. If the whole world thinks we're going to have a recession, people will say, okay, you know what, if everything slows down, people, for their protein, they're going to choose pork because pork's cheaper. So you could see more money coming in there. You saw a big, long liquidation. The funds were long the entire protein complex for quite a long time. They started liquidating really when the stock market started selling off. That was their first exit point, right? They started.
Are you saying that the hog market is more tied closely to the stock market than maybe some of the others?
I think so. Well, especially the live cattle and the lean hogs. And again, this is 2022 it's been a very, very unusual year, the last year and a half, where things that would have, in the past, would have made you want to make a decision have gone out the window. And you've seen the impact of a lot of money flow coming into commodities that hadn't been there a year and a half ago. That's number one. So you've got money flow issues. And you also have the very, very technical. We've gotten some kind of really good fundamental news. And then a week and a half later, they're selling the hogs and buying the cattle as a spread. So I think that if I'm a hog producer, I'm going to be more and more interested in where we are in the charts for a while. And when we get these good rallies, regardless of why we're doing it, it's an opportunity for you to get your protection on there, and that's the key.
Well, did you miss your chance with protection and chart signals with the cotton market?
No, cotton market had a 2-year rally. We were at 50 cents. We went to 133.80, and the whole way up. Usually $100 a dollar, 100 pennies, a dollar a bushel, a dollar a hundredweight. That was a great level to have. So you had every opportunity to protect that level for cheap, very cheap. I mean, 3 cents a hundredweight, less than that, which is $1,500 contract. The thing was, we kept going higher and higher and higher, and people are like, well, it's never going to come back. It corrected just textbook fashion, up the escalator, down the elevator shaft. We lost the entire year already. If you go back to where we were in 2020, we've given back half of that rally, or about 60% of that rally. So very technical. Now today, this Friday, I don't know if you saw it, we made a new low, and then they came for it at the end of the day. And that's a big technical level. So here, we're back to, we're not so much trading fundamentals, we're trading these technical levels.
Well, before we get to your questions that you've submitted, a lot of good livestock questions coming here. Chris, I was watching the corn market on Friday afternoon, and we were on the precipice of closing below $6. Would that have sent a technical signal?
Well, I think if for better or for worse, the answer is yes, because the markets like to focus on round numbers.
Yeah.
For 50 days, we were above $7. Let's not forget that. For 50 days, we were above $13 beans. So you had all the time in the world to really take advantage of really good prices. The question is, did you do something about it? And if you didn't, don't spend time beating yourself up. I missed the highs. These are, corn at $6 is still a lot better than corn at $5.40.
Well, yeah, and I wrote down what I wanted to talk about with you, perspective. You still have to think, even where we have been, take that out of account. $6 corn, $14 beans is still considered. Now, I'll get beat up a little bit for saying, yes, but my inputs weren't that high like they were before.
Right. Well, it's a give and take, too, because remember, when 2020, when we bottomed out, everybody's inputs were cheap then, because that's when we had negative crude oil, and so that was a really good year to run into a year where your inputs were actually way more expensive. So I get that, I understand that, but you also have to remember that 2 years ago we were at $3.50 corn. You look at these 22, go look at that contract. 2 years ago we were at $3.50, and then to go to what was the high, $7.60, and that's why it's always painful and upsetting and emotionally upsetting and draining when you lose half of that rally in 2 months, and it was very, very powerful. And the fundamentals all went out the window because we were still worried about yield, still worried about what's going to happen. Right now, we're in pollination. We mentioned this earlier. A week ago, Sunday night, it was hot and dry after the 4th of July weekend. It was game on. 24 hours later, we were back down on the lows. So we went, after a $2 break, we had a $1 plus rally, then a $1 break. So I've been doing this for 33 years. That's one of the most insane 72 hours I've seen in a long time.
It's like you ate the wrong hot dog at the 4th of July.
Absolutely,
The indigestion
absolutely.
was tough.
And so the market's going to give you chances. You just have to be ready to take advantage of them when they're there.
All right, let's answer a couple questions here. Dennis sent this to us on Facebook. He wants to know, should I sell wheat off the combine or should I hold?
Well, wheat's still $3 above where it was on its lows a while ago. So you have to look at the relative risk. So if you don't want to sell it, you've got to say, okay, how long do I want to hold it for, and what's it worth to protect $1 or $1.50 risk? Because guess what? You go to bed at night these days, and you have $1.50 risk in wheat. So yes, if you want to sell it off the combine, if it's a good price, then what are you worried about if you sell it off the combine? Well, I'm worried that it's going to rally $1.50 after you sell it. We own it with a cheap call, so you have to hedge for whatever risk it is. If you're going to store it, you need to have a put on because you don't want to be in a situation like you just saw where it doesn't matter why. The market moves against you, and if you don't have something to help you sit through that, it's lost revenue.
Don't get him started on overnight trading. That's a whole nother market plus that could go on forever and ever and ever.
Yeah.
All right, let's do AJ in Minnesota here, everybody. Did feeder cattle finally break out to the upside? If so, what kind of price targets are we looking for? Or is this a place where we should be hedging September feeders?
I reached out to everybody because part of the reason we had the bump up was because corn dropped. So that's a indirect relationship. Corn goes up, feeders go lower, vice versa. So it was a gift. We had been in kind of a sideways trading range for a while. We rallied $17 off the low. So is it worth it to spend $1 or $2 to protect the possibility? Because we've seen time and time again this year, we rally $10, we get back 5. We rally 20, we get back 10. So we rallied 18. I'd protect 9, and you don't have to spend a ton to do it. And you want to buy your puts on the rally because that's when they're cheaper. You just have to kind of grin and bear it, bite the bullet. So yes, this is a rally to protect. If we do get a turnaround and corn, we have an issue with corn, it's going to put pressure on feeders. So buy your puts.
Okay, I kind of danced around this a little bit, Chris, in the main show, but Nathan in Tabor, Alberta, and I think that's our first question from Alberta we've had. He wants to know, we're watching these mile-long convoys of ranchers in Texas. I've seen them on the internet here this week. Where are the majority of these cattle going to end up? Are they going to feedlots? Are they going out of state? Is this all pasture condition related? Is this going to keep the cattle on feed elevated more than previous predictions for the remainder of 22 and early 23?
Well, the past couple of cattle on feeds, we've had higher placements. They've been, bigger than people had anticipated. I think we're going to get a number out this week if it hasn't already dropped. The overall size of the herd continues to get smaller. And I think what's happening in Texas, we touched on a little bit earlier, they have the worst drought since 1950s in that area. And if you can't get the grass to grow, you can't feed the animals, then you have to buy the hay. If the hay has gone from $50 a bale to $100 or $150 a bale, that's an untenable business decision. So that's why you're seeing all these animals. These animals, they'll end up somewhere. The market will find a home for them. And I think that if there's a silver lining to it, if it's happening this week, we had a little bump up. So hopefully those people are getting a better price for the animals. We've seen a pretty good jump in cash cattle lately. So that's a blessing too. So it could be, I'm always a glass half full person. I always say, it could be worse. I can remember years ago when we were excited about protecting 80-cent cattle. So with cattle where it is today, I know your inputs are higher, but at the end of the day, I think that's a localized issue. And yes, you'll see it in the cattle on feed, but the herd's small, it's getting smaller, no surprise.
Real quick as we close, your windshield tour from here to home, what'd you see?
It got better as I get into Iowa. When I was driving through Dixon and Ronald Reagan's hometown, some of the corn looked like it needed a drink. And it does. And now, we're going to talk about that, the weather. What's going to happen in the next 2 weeks? We're in pollination. The rubber's going to meet the road. Everybody's opinion, we'll find out in 2 weeks. So I don't care if you're a bull or a bear, keep your risk on paper, please.
Okay. If you don't get anything from Chris, it's right there.
That's right.
All right. Chris Robinson, good to see you. Thank you, sir.
Thanks.
All right, that's going to do it for our Market Plus. Thank you for subscribing or watching here. Next week, we'll continue the discussion around this story about the sunflower industry and how they are adjusting to global changes. And Jeff French will join us to analyze the markets. Thanks for watching. Have a great week.